Hello everyone, this is our strategic management project and the company we're going to be discussing about is Amazon. This presentation will be presented by Susmita Gurung, Nicholle Hidalgo, Mackenzie Mabrey, and James Shelton. Amazon was founded in June 1994 by Jeff Bezos in Bellevue, Washington, where its headquarters is now in Seattle, Washington. Jeff Bezos wanted a name for his company that began with the letter A so that it would appear early in the alphabetic order. Therefore, Amazon was named after the largest river in the world, the Amazon River. Amazon first started with selling books to a mass audience via the internet. In the first 2 months of business, Amazon sold to all 50 states and over 45 countries. Within the first 2 months, Amazon sales were up to 20,000 weekly. It is the largest e-commerce in the world, which revenue was $386.1 billion in 2020. Amazon's current CEO is Andy Jassy, and its top subsidiaries are Whole Foods Market, Amazon Fresh, Audible, Zappos, Blink Home, and more.
In this section, we have explored the external environmental analysis by conducting a SWOT analysis. This will tell us the strengths and weaknesses, opportunities, and threats of Amazon. For our strengths, we have Amazon has a strong brand. It's very well known. I personally order from Amazon 24/7, and to me, Amazon is like the go-to for shopping. It also has modern and expanding business diversification. It's everywhere, and as well as you can buy anything in there. Like, it's crazy. High capability for rapid technological innovation, especially online services. Of course, everything is online, and it's just they keep updating their website to go with the new norm. Weaknesses, history of product flops, free shipping to its customers, and danger of losing its margins. This is very important because sometimes when you have free shipping and you're not charging for your shipping, and let's say somebody orders a product and it gets to the house and now it needs to be returned, or this item gets lost, that's a loss of income revenue, and that's the main important for me weakness that Amazon has, as well as it has imitable business models and also limited penetration in developing markets. Now we're going to go to opportunities. Amazon is a company that has a bunch of opportunities, and not only that, they're very well known, which because of this, their expansions in developing markets are like great, and as well as new partnerships with other firms. So you can, like I said before, you can buy anything on Amazon from any brand. And this is great because you just go to one place. And these are opportunities because, hey, why would you miss out going to one place that has everything instead of just going to every individual store just to get a specific brand? But from here, we're going to go to threats. Amazon may have lots of threats, but it's still number one company. They have aggressive competition online and not online anymore, because I know they are doing Amazon stores soon. And also, any company that is online there's a risk of cybercrime, and this will be for Amazon, its competitors like Walmart. And there is the last threat, which is super important, is because there is imitations of the products or business models everywhere. Like I said, Walmart is an example. You can buy a certain product on Amazon, Walmart as well, and it could be different pricing, or just same brand, different pricing, or just a store brand, and it could be better. And that's always going to be a threat. Yeah. We also wanted to conduct a full environmental analysis by completing the PESTEL analysis, which in this slide we can see that we have the political factors, economic factors, and social factors. With this being said, I have listed 3 bullets in the political factors, and these bullets are very important because government policy and actions can impact the economy, and other factors affecting a business. Like our first bullet, political stability of developed countries, especially the USA and European countries. I feel like Amazon can expand its brick and mortar operations in the United States to complement its e-commerce business. The second bullet that I've written down, governmental support of e-commerce. Governmental support facilitates Amazon's continuing expansion in relevant markets. So this is why it's important to always have a political not background, but more of like support when it comes to expansions and joining a new market and just developing any new trend you want to within your company. The third bullet we've put here is increasing governmental efforts on cybersecurity. A company can exploit to increase its resilience in the remote or macro environment of the information technology services and e-commerce industry. So if you're like, for example, Amazon is an online company, and you want to have that security that so you don't have any cyber attacks or anything related to that matter. And this is why you should have political factors in place just for protection, as we can say. Another important factor is economic factors. Economic factors take into account the various aspects of the economy and how the outlook of each area could impact your business. The first bullet we put here was economic stability of developed markets. It's very important for a company to be aware of the economy and make sure that the economy is stable at the time. This situation can minimize economic issues in the remote or macro environments, thereby minimizing risks to companies' online retail businesses expansion. Also, increasing disposable incomes in developing countries. The increasing disposable incomes in developing markets can boost the company's financial performance. So these are things that are extremely crucial when it comes to your company and determining what are your factors that take in place for external environmental analysis. The last factor mentioned in this slide is social factors, which are related to cultural and demographic trends of society. The first bullet says increasing wealth disparity. Let's just say this: higher disposable income levels are more favorable in increasing the e-commerce company's potential revenues. So just knowing the, how can I say this? Knowing the financial demographics in which your company will be entering in. It's very important because this way you can develop product, services, and that fit within that area. Increasing consumerism in developing countries is also higher. So higher consumerism in developing markets increase the potential success of Amazon for its genetic strategy for competitive advantage and intensive strategies for growth. So this is as the company looks to expand its global online retail operations. So the last bullet we have written down: increasing online buying habits. Me personally, I love buying products through the internet instead of just walking into. It's not the same. Like now, it's just you get it at your house. You can take your time taking a look at it, and that's something that we have to keep in mind because everything's just online now. And to fully understand the environmental analysis, external environmental analysis, we're just gonna mention the three remaining factors, which are technological factors, environmental factors, and legal factors. As you can see, technological factors are linked to innovation in the industry, as well as innovation in the overall economy. Not being up to date with the latest trends of particular industry can extremely be harmful to operations. Rapid technological obsolescence. The corporations continue heavy investment in information technology can boost its competitive advantage and protect the business from new entrants in the e-commerce industry, as well as increasing efficiencies of IT resources. New computing technologies can maximize online retail productivity and minimize operational costs. And as mentioned before, increasing rates of cybercrime. This factor threatens the quality of customer experience as well as the integrity of Amazon's business. Then we have environmental factors. These are ecological impacts on a business. Rising interest in environmental programs. Such interest is a direct consequence of ecological challenges, such as waste management and energy consumption. Another environmental factor bullet point, rising emphasis on business sustainability. Higher sustainability standards can improve environmental impacts and strengthen the brand image of the e-commerce business, so strengthen the brand image of Amazon. Lastly, increasing popularity of low carbon lifestyle. So this is all related to environment. This provides opportunities for the company to boost its corporate image as a leader in e-commerce industry. So Amazon could implement extensive energy saving policies in its operation for this exact purpose. And the last factor is legal factors, which kind of relates to political factors a little bit, but not exactly. Legal factors pertain to any legal forces that define what a business can or cannot do. This would be for rising product regulation, changing import and export regulations, rising environmental protection regulations on a business. Such efforts can increase business competitiveness in the remote or macro environment. It creates opportunities for Amazon to intensify its efforts in reducing counterfeit sales on its online and retail website, as well as Amazon will have the ability to expand its global operations to exploit the increasing ability of sellers to access overseas suppliers.
Hi, my name is Mackenzie. I will be presenting the financial review for Amazon. Amazon's primary source of revenue comes from the sale of a wide variety of products and services. Amazon classifies its sales revenues into two categories: product sales revenue, which is generally items sold by Amazon, and service sales revenue, items sold by third parties. We see here in the first chart that Amazon has organized their operations into three segments: North America, International, and Amazon Web Services, or AWS. 60% of the company's sales come from the North American operations, 27% from international operations, and only 13% from AWS. If you look down at the second chart, it shows the rate that these sales have been increasing over the previous years. The sales from AWS operations, although only 13% of the company's revenue, they have been increasing at a much higher rate than both the North American and international operations, except for 2020 when we saw the initial outbreak of the COVID pandemic. Here we are looking at a comparison of Amazon and one of its biggest competitors, Walmart. Although Walmart has had a consistently higher revenue than Amazon, the rate of increase has been steady, averaging about 2.4% per year, where Amazon has almost caught up to Walmart's sale revenue with an average increase of about 27% per year. Amazon sales rose almost 22% in 2021, from about $386 billion to about $470 billion. They had an increase in operating expenses of 22.5%. After figuring in non-operating income and expenses, as well as taxes and interest, Amazon had a net income of $33.4 billion, which was over a 56% increase from 2020. Earnings per share, calculated at 506 shares, rose almost 55% to $66 per share. Amazon's total assets rose 31%, liabilities rose 24%, and stockholders' equity rose 48%. Amazon's current ratio shows that for every dollar of current debt they have $1.14 in current assets. Amazon's debt-to-equity ratio is 2.04. In simpler terms, it has 67 cents of debt for every dollar in assets, leaving 33 cents of equity for every 67 cents of debt. One of the things that Amazon is proud of is the fact that they have a high-velocity inventory and receivables turnover. Their inventory turnover rate was 8.34 in 2021, and they collected their receivables about every 25.5 days, or 14.28 times throughout the year. They collect their receivables over 4 times before their payables are due, which is referred to as a cash-generating operating cycle. Amazon has a very good profit margin at 42%. This means that Amazon generates 42 cents of profit for every dollar in sales. The chart on the bottom shows what is called a DuPont 5-component disaggregation of return on equity. ROE is a commonly cited number, although it does not always show true to how well the company is performing. The DuPont analysis lets us break it down into several ratios at once so we can analyze it a little deeper and see more of an overall picture of the company's performance. Looking at this chart, we can see that the increase in return on equity from 2019 to 2021 is a response to the increase in the EBIT margin, earnings before interest and taxes. This slide is showing the market performance for Amazon. The market analysis is a little tricky and involves many different factors. Here we are looking at just a few of them. On April 12th at 11:24 Eastern Time, Amazon was being traded for $3,082.89. This was up 2% from the previous day's closing price. The market capitalization is the total value of Amazon, which was $1.6 trillion, and the price to earnings ratio was 47.35. The beta is a very important number. In simple terms, it is the level of risk of an asset compared to the average risk. The average asset has a beta of 1, and Amazon's current beta is 1.12. With all of this information and a lot more we have not discussed, Out of 49 market analysts, Amazon has an average predicted earnings per share of 72.54 by next year.
Amazon's strategy is primarily about meeting and exceeding their customer needs, as well as extending and solidifying their market leadership. They accomplish this under the premise of four basic principles: customer obsession rather than competitor focus, passion for invention, commitment to operational excellence, and long-term thinking. In order to determine the effectiveness of initiatives that are implemented to support their strategy of exceeding customer needs, Amazon uses metrics that determine both the customer retention as well as their customer growth. Looking at strategic concerns in regards to exceeding customer needs, Amazon has to consider competitor innovation that could result in a loss of market share, as well as their employee satisfaction and well-being. An excellent example of a competitor that could take market share through innovation would be Home Depot and their temporary partnership with Walmart's Go Local delivery service. The Go Local delivery service was an option that provides a same-day delivery to their customers. This presents the beginning of a threat of substitution for Amazon's Prime delivery options. Employee well-being and satisfaction is also important because of the company's image. Reports have shown that 23 of Amazon's 110 warehouses have had rates of serious injuries that were twice the industrial average. Lack of action from Amazon has led to the development of a Make Amazon Pay initiative, which has created protests in 22 countries, as well as a call for Amazon to unionize. Unionizing can create a different threat for Amazon, and it could be potentially damaging to the economy due to a wage rate being set that may not be sustainable for every economy that Amazon operates in. With this in mind, some of the recommendations moving forward would be for Amazon to focus on their employees' satisfaction and well-being. This would involve increasing their workforce in order to offset a reduction in productivity demands, but still maintain their level of output. Simultaneously, there should be a cost analysis of increasing the use of robotics, as well as implementing a pilot program in order to automate most warehouse functions. Amazon could then transition their warehouse employees to be technicians that maintain the robots, which could sustain a higher productivity than their human workers. This would be possible since Amazon previously used a backwards vertical integration strategy by acquiring a company known as Kiva Systems, which has been renamed to Amazon Robotics, which currently supplies Amazon's warehouse robots. By doing this, Amazon would be able to improve their company image, which would increase their growth, as well as solidify their market leadership. This would also improve their employee retention, which would supplement the expected growth.